DocuSign stood up tall on Friday's trading. It was up almost 4%. At the same time, the Nasdaq was down 2.55% and the S&P was down 1.73%. Why did DocuSign go up while the rest of the market was going down? Well, DocuSign is underappreciated. It's a small cap. It's also a software company, and software companies have been left behind by investors going to semiconductor stocks and chasing the AI hyped stocks. And I'd like to go through my analysis of DocuSign. I'm a stockholder. And I'll share with you why I continue to buy shares in DocuSign, why I think it's a good investment for me. DocuSign over year to date, it's up 3.81%, which isn't a whole lot considering that the Nasdaq and the S&P are up much higher. Over the past year, it's looking a little better at 17.88%. But I happen to think this one's going to be going up. DocuSign is underappreciated. If we look at their fundamentals look really good. First, it is a small cap at $12 billion market cap, and the revenue is almost $3 billion. It's a software company, so that's an industry I really like. The PE this year is 12.54, which is not a very high PE. And analysts say it's a hold and that it's almost barely priced. Now, when I look at their financials, the trailing 12 months, they're growing the revenue by 7.7%, which is very good. The company really grew during COVID years when their digital capture software became very, very popular. DocuSign is the leader in digital signature capture, and they are beginning to expand into other product lines within the whole contract management process. Now, their top line revenue looks great. They're very profitable. Their gross margins look great, by the way. Gross margin on this revenue of $2.8 billion is almost $2.3 billion. So the margin is excellent. Their balance sheet is very good. They have cash and short-term securities of $938 million. And they have total debt of $135 million. So they could just write a check to pay off all debt. That's a very good balance sheet. That means the company is lower risk. It means they have a lower likelihood of going bankrupt and having issues related to how much debt they have. When we look at cash flows, the situation continues to look good. They operate really good cash flow from operations, and they don't have a whole lot of CapEx. So their free cash flow is $919 million in the trailing 12 months, which is a very good cash flow rate. I use cash flow and earnings per share to value companies, and that's what I'll do next. When I look at the cash flows that I just showed you, I'm going to use that as my starting point, but I'm going to grow it by a tiny bit, which is 5%, and just have a good conservative growth rate on the free cash flow forecast. And after year 4, I'm going to grow it by a little more conservative rate of 4%. So all the cash flows I expect from the company in the future are in this line. This is the forecast. They have a very good balance sheet. So I'm going to use a discount rate of 8.5%. And it gives me an intrinsic value, which is a net present value of all those cash flows, discounted by 8.5% of $20.7 billion. I add cash and take away debt to get to an equity value of what I think the entire company is worth. The market cap's 11.6 billion, so far lower than their intrinsic value. So it provides a very attractive 78% discount if you look at the free cash flows of DocuSign. The earnings per share, I would agree with analysts that say that their earnings per share reveals about a 6% discount. But I put more weight in the free cash flow valuation, and I get a blended discount of 54. DocuSign is an acquisition target. A larger software company can buy this company, get these cash flows, and get that revenue growth as well. So I happen to think that they continue to be a good acquisition target. They were almost taken over by a private equity group in the late 2023 timeframe, which caused the stock to really rally. So it goes to show that this is a good acquisition target for investors. I think the DocuSign business is attractive and desirable. I like companies that have strong moats, barriers of entry, and have market leadership. And DocuSign, although their products are very narrow, they are the dominant leader in digital capture. So I like that they have, I think, a commanding lead in that industry. They have very good margins. They continue to grow their business. It'd be nice to see them expand into other products and continue to be a very well appreciated company within these companies that use DocuSign. So what am I going to do with DocuSign? I showed that they have a really attractive discount. It's a good business to own. I like software companies. So I'm going to continue to buy shares of DocuSign. It was good to see that the market did appreciate them on a very down day. And I think that the next couple of months, the stock may rally well because it's been recognized by some investors who decided to buy on Friday. So I'll continue to buy shares on pullbacks and expand my investment in DocuSign. So that's my video on DocuSign. Just remember, I'm an individual investor, just sharing my experience with you. I'm not recommending you buy, hold, or sell DocuSign. I'm just sharing my experience. Please make your investing decisions independent of this video. Thanks a lot for watching. Good luck with your investments in 2024.